Friends, welcome to my channel. So this is a special video which I'll be making for the budget. What kind of a strategies we need to apply and how we need to execute and how we need to prepare for the budget day. Friends, I've noticed at YouTube, like some people, they are coming and they're giving a wrong information saying like we need to apply these strategies, we need to do this way, we need to execute this way, but that is completely false. Please don't fall into that kind of traps. When you are having a risk event days, you need to have a proper planning and proper execution and proper pattern recognition. Only that you can make the money. If not, you'll lose all your capital, and especially these days, like most of the accounts goes into zero. So what exactly will happen? Why the event tradings are so pivotal, and why the risk event days are so important? Well, when you are having a risky event days, we don't know what is going to happen. I mean to say, like the finance minister is coming and imposing taxes at the IT stocks. We don't know the IT stocks are going to fall. We don't know any taxes on the stock market. The finance minister is coming and she's imposing taxes at the stock market. We don't know. So there is a lot of uncertainty in the market. When there is a lot of uncertainty, the price movement will be very aggressive. The institutions has to price aggressively. They have to reprice the market very aggressively. So aggressiveness is like the price will be keep moving at higher and higher levels, or falling the market, and very fast. The price will be moving very fast. The price won't be waiting. It won't be going higher levels, and it will be waiting somewhere, and it won't be moving at this way. The price will be very aggressive. The price movement will be very aggressive because the institutions has to aggressively reprice the market basis on the information being given by the finance minister. Yes, some people will be having insider news. Some people will be knowing like what they are doing, and some insiders might have got the information earlier before itself. But still, at the live market, the institutions might not know like what is happening inside, so they have to aggressively reprice. So when there is aggressive reprice, if you are sitting at a wrong side, we'll be losing all our capital. We'll be going completely zero. So there will be high risk. With the same time, we'll be having a higher opportunity in making the money. The best way how we can make the money is like we need to add our size. So the adding the size makes our account to grow very big, and with that we'll be making a lot of money very easily. So what exactly adding a size? Adding a size, like take for instance, normally you'll be having a certain kind of setups. So what is a setup? A setup is like you'll be trading sometimes a inside candle setup, sometimes you'll be trading a breakout setup, sometimes you'll be trading a higher high higher low setup, sometimes you'll be trading an impulsive setup. So you'll be having a different kinds of a setup. No one will take a random trades. The random trades are like amateur people will be taking a random trades, but some who is already into the market for 1 or 2 years, they'll be having a certain kind of a setup. So based on that A category setup itself, you have to execute your trades. When there is a risk event, you need to execute only on the A category setups. You should never go into a B category or C category setup. B category setup is like, okay, I'm going to take the risk. It is just like there is an inside candle which has been forming, and I'm taking a trade before closing the candle itself. No, that doesn't work. You need to take the trade setups only on the A category setups. When you see the proper inside candle, when you see the proper breakout, when you see the proper absorption reversal, when you see the higher high higher lows, then only you need to execute your trades. With that, the same thing, like whenever you are taking a trade, you need to add your size. The size is like, take for instance, you are having a 5 lakhs rupees of your money. You're putting all your 5 lakhs on the same day, but with that you have to manage the risk. The managing risk is like you're taking only the 5% of your capital as a risk. So 5% of the capital will be like 25,000. 25,000 you'll be putting your stop loss, and you'll be executing the trade only on the A category setups, because we don't know what kind of a risk is coming. Is the markets are too volatile, Is the markets are moving at higher and higher prices? We don't know what is happening. So that is why we need to have a proper risk management. So when you have a proper risk management, we are executing only on our A category setups. So when you are having a 5 lakhs of your capital, you'll be allocating your 5% of your risk and we'll be putting a stop loss, and then we'll be waiting. I don't even prefer like what are the targets you need to achieve, like what target you need to, the targets is totally dependent on you. You might take, even some might take like 100 points and some might take like 50 points. It all depends on you, but you need to execute only on your A category setups, because you don't know like what kind of a risk is coming. We might even wash out with our capital if we are not having a proper risk management. And you need to add when the odds are in your favor. Say like you have taken your trade based on an inside candle and the market is going on higher and higher levels, you can add your position more and more. If you're having more capital, you can add more and more and you can trail your stop loss. Right? So when the odds are in your favor, you can ride the trend. If the odds are not in your favor, you can book your profit and you can come out of that position. So the main thing is like you need to recognize the 4 patterns in the risk event tradings. So what are the main 4 events, 4 patterns, sorry. What are the major 4 patterns which you need to recognize at the risk event tradings? The first pattern is like trend fashion. Trend is like the market goes at a higher levels. The market goes at a higher levels. It has a very shallow pullback and it goes higher levels, and it has a very shallow pullback and it goes at a higher levels. This is the first kind of a pattern. The second pattern is like the market goes at a higher levels. The market goes at a higher levels. You have a shallow pullback. The market try to have a sideways mode for some time, and then you'll have a breakout at a higher levels. So this is the second pattern which you need to recognize. Sorry, my pen is not working. And third pattern you'll be having is like the market goes at a higher levels. It makes all sort of a funny things, and it sorry, the market goes at a higher levels. It makes all sorts of a funny things, and it starts to come at a lower levels. This is a third kind of a pattern which you need to recognize. And a fourth pattern is like market goes very aggressively at a higher levels and it flushes all the way to the lower levels. So when the market is crossing these levels, we need to execute. I'm going to explain you like how we need to execute, where we need to execute, and where the stops goes when there is these 4 patterns, when you recognize these 4 patterns at the budget trade. So the first one is like trend fashion. Trend fashion is like the market goes very aggressively at a higher levels. The algorithms will be taking a very short profits. The institutions will be booking a very short profits, and the market bounces at a higher levels. So as soon as the market goes at a higher levels, when you notice these things, when you have a shallow pullbacks, we'll be entering somewhere here and we'll be having a very tighter stop loss. Like as I mentioned, like 5% of your stop loss. And we'll be holding up until this low volume area will be tested. So whenever you be watching these things, if you have an order flow chart, you'll be noticing we'll be having a very good amount of a low volume area in kind of a trend like fashion. So whenever up until this low volume area has been holded, our strategy is still up implied. We'll be putting a stop loss somewhere here and we'll be playing this trend. This is the best setup which I'll be telling you, where you can make an excellent amount of a profit, where your 5 lakhs can be, where your 5 lakhs of your capital, whatever the capital you are allocating, it might even become a double or triple when you have this kind of a setup. This kind of a trend like a fashion, it makes you a very good amount of a profit, and it can even double or triple your account. The second kind of a pattern is like the market goes higher, and at certain points you'll find a liquidity. There someone is providing the liquidity in this kind of a place where you can make a good amount of a profit, but not the way you make the profit here, you can't make that much of a profit, because the someone is providing the liquidity, there is a chances of going at higher levels, but the price continuation won't be there in this kind of a pattern. So whenever the price goes at a higher levels, we'll be entering somewhere here and we'll be booking our profit. And sometimes we'll be entering at the market, and market might even turn over at a lower level. So the opportunity at these levels is like very abundant and very limited opportunity. So we'll be booking our profits at certain price and we'll be coming out of the positions. And third kind of a pattern is like the market goes at a higher levels. In this, the very less opportunity, but still you can make the money. Whenever the price is coming at a lower and lower levels, we can position ourselves a short position and we can play for a short opportunity, but we can't make a big money in this kind of a pattern. The fourth kind of a pattern where you notice is like the market goes very aggressively at a higher levels and flushes all the way to the lower levels in a V reversal, So if you notice this kind of a pattern, when the market is going, when it crosses like 50% or 60%, you can build your short position. If a safe trader can enter only when the starting price has been taken over, because the positions will be unwinded by the big institutions. Take for instance, like a big institution has positioned here and he has taken the market very aggressively at a higher levels. He'll be having a big large orders here. Whenever the price is flushing at the lower levels, everyone starts to get out of the position, so the price might flush all the way to the lower levels and price can move very aggressively at a lower levels. So you need to remember these four patterns whenever you are having a risk event days. I would say like budget, we might see any of the one of this pattern. So we need to get prepared at the four kind of patterns. So whichever the pattern is coming, I'll be updating you at the Telegram channel as well, and you need to prepare by yourself. So the best one which I recommend you is like trend fashion, where you can make a very good money. And even the fourth pattern also, you can still make the money, but not, you can't even double or triple your account. Why? The main reason is like, when you see this kind of a pattern, the institutions, when you have this kind of a pattern like a trend fashion, the institutions are price sensitive. They are not price sensitive. I'm sorry. The institutions are not price sensitive. They just want to fill the orders and they just keep buying up until their order has been finished. So they don't even damn care the price. They take the market higher and higher prices. And at the second time, you'll be having a lot of volatility. When you see this kind of patterns, you'll be having a lot of volatility. Some people they'll be buying and some people they'll be selling. Some will be buying and some will be selling. So I mentioned you at yesterday, like there's too much of volatility in the market. Too much of volatility is like, yes, we have a lot of opportunity, but at the same time we'll be having our stop losses. The stop losses will be very wide. It will trigger all your stop losses and it might make the account zero. So there is a lot of volatility when there is a risk event. Everyone want to get into the position. When the price is moving at a higher and higher levels, no one wants to sell. The price keeps moving at a higher and higher. When the price moves, the people responds. Keep in mind, remember one thing. Whenever the price is moving, the people, they response in the sense they keep entering their positions. Take, if the price is moving, the institutions, the retailers, they keep buying. If the price is staying at one point, no one will buy. So at the risk event, the price has to aggressively reprice based on the information, based on the data, based on the news, because the news comes later. The news will be coming very late. So the price has to aggressively reprice. To aggressively reprice, what the institutions has to do, the institution has to either sell or either has to buy. So they don't have the other choice. They have to aggressively reprice the price. So everyone wants to get into the position. Before everyone are getting into the position, we have to be entering into the market. We have to enter, we have to position ourselves either long or short. So there is a lot of volatility in the market. So we have to adjust our risk as well. We need to allocate our capital. So with that, we don't know what is uncertainty is going to happen. Is the market going up and coming back all the way? We should have our proper stop loss. And we need to execute only on our A category setups. So please remember this kind of four patterns. And first and foremost thing you need to notice is like, is there a liquidity in the market or it is a illiquid? So that can be known only with the order flow chart. You can't see with the candlesticks, or you can see with the volume bar. If there is a liquidity, the market is going to go and it is going to come on the sideways mode. If there is no liquidity, the market is going to go at a higher and higher levels, because the institutions, they keep buying up until their order has been finished. They keep buying, they don't even care the price, they have to fill their orders. So the price keeps moving at a higher and higher levels. You need to notice this, whether there is in the market there is a liquidity, or the market is illiquid. And the price shows like where the price is moving. Is the price moving at a higher levels? Is the price coming at a lower levels? So please remember these 4 patterns and execute only on your A category setups. So with that, what you need to do, you need to have a proper preparation. So what are the proper preparations are like fundamental news as well as your technical news. So technically, we'll be seeing at the technical charts like what the price is doing. As I've mentioned, like there is a short position in the market. It might even come down at a lower levels on Monday, because the Tuesday there is a budget, and Tuesday, like on Mondays, technical, it will decide like where the institutions are going to take the market. So technically we'll be coming up with a video on Monday. Fundamentally, I'm telling you, fundamentally you have to get prepared before executing any of these trades. Take for instance, if you are trading with the bank nifty, you need to have a proper fundamental news in all the banks. What the banks are doing, what the all banks are doing. Is the budget minister is coming and giving a favorable to the any of the banks, for any of the PSU banks. As you've noticed, on Thursday the PSU bank index was up. The PSU index was outperforming. With that same time, like private sector banks, Axis Bank was also outperforming. So you need to have proper fundamental news. When you have a proper fundamental, then we can go with the technical. Based on the fundamental itself, the risk given days will be moving. So we need to be prepared. What are the benefits will be given for the banks? What are the benefits? What are the taxes has been added for the banks? Is any bankruptcy are coming? Is any insolvencies are coming? Or is the banks bad loans are coming? Is any bad loans are affected? And what are the results are happening? And why the HDFC twins are falling? You need to be aware all the fundamental news before you execute your trades. So with that, we'll be adding certain technical as well, and we'll be saying like what chart is telling for us where we need to position ourselves, and how we need to execute on that day. Well, I've covered most of the things. So the main thing you need to focus is like you have a proper preparation when you are playing on a risk given days. So if you have a proper preparation is like with the fundamental, technical, and your position sizing, and your capital allotment, and recognizing the patterns. With that, you'll be noticing whether the markets are liquid or illiquid, where the price is moving, and whether the volatility is increasing or there is a uncertainty in the market. Well, I've covered most of the things, and let me show you the budget chart. As you can notice here, this is a budget on last year 2021. I'm just taking a 1 year. I can't even take like last previous years or before years. You can notice up until 12:30, I would say like up until 11 o'clock. Up until the 11 o'clock, the market was in a sideways mode. So once the news broke out, you can notice like there's a trend fashion. Market went up, very shallow pullback. Market went up, very shallow pullback. Absorption, the market went up, very shallow pullback, and there was a little bit of a stop run, and later the market has rallied all the way to the higher levels. Just a second. As you can notice, there's nearly a 2000 points of a rally. Can you imagine 2000 points of a rally in the bank nifty? 2000 points with 1000 quantity of your size, like how much you'll be making a profit? You'll be making like you'll be doubling or tripling your account size. Till 11 o'clock nothing was there. As you can notice, like 11 o'clock there was a breakout, and there is a shallow pullback, like I explained at a first kind of a chart pattern recognition. In the first chart, I clearly mentioned you like there is a trend fashion. The trend fashion where you can make a hell lot of money. The market went up, little bit of an absorption. Market went up, little bit of an absorption. Market went up, little bit of an absorption. There was a stop run, and the market went up, little bit of an absorption, and all the way the institutions, they positioned themselves and they started to buy. They started to buy and they took the price higher and higher levels. What you need to notice, I mentioned you one thing, is the market liquid or illiquid? In this market there is completely illiquid market. Illiquid is like no one is selling the market. The institutions, they keep buying, because if someone is selling the price will come down. No one is selling, the price is going higher and higher level. This is a 2000 points rally in the bank nifty. 2000 points, like, take, if you have covered even a 500, 600, 700 points, you would have make a hell lot of money at a risk event. So the best one, we need to see this kind of a one, trend fashion. So trend fashions will make you a quick, you can make a very quick and easy money at this kind of patterns. Please recognize the patterns. I'll be updating you at a Telegram channel as well. Please do subscribe my Telegram channel. If you like this video, please do press the bell icon button and subscribe my channel. Thank you so much.